Welcome back to the channel, the Business Strategy Analyst, Africa. If this is your first time here, we will encourage you to look at the introductory video. This channel is sponsored by Soleil Group. You can visit our website at www.soleilvision.com. There you can be introduced to the subsidiaries in the group. Today, we are looking at the shareholder value motive of management. We are looking at whether it is wise that the commission of the board of directors and the CEO hinges primarily on increasing shareholder value is what we've been told and taught over the centuries in corporate governance. But is it wise to make that the foremost concern of top management? What are the effects of such a stance? Is there a better way? These are the questions we will be addressing in this discourse. I appreciate that these issues I'm going to raise may not sit well with some persons, but it is a dialogue. Let's get a debate or discussion going in order to fine tune corporate governance, especially in Africa, to suit our exigencies and make it more relevant to the needs of modern society. So, why the shareholder value? Shareholder value or shareholder value maximization basically refers to the returns that shareholders make on their investments. Usually, the main reason why the board, and for that matter, top management makes the shareholder value a priority is the money that these put into the business. It is premised that since capital is very critical for the establishment and continuous growth of a business, those that make that money available should have good returns by way of being paid good dividends on their investments or by causing the stock price to increase. And all this makes sense, doesn't it? So, in itself, there is absolutely nothing wrong when management seeks to maximize the shareholder value. After all, no one makes an investment for charity. And so, since shareholders would naturally move their monies to businesses that offer better returns on investment, management should be concerned about enriching shareholders in order to retain them and have capital readily available. However, there is a problem when premium is placed on satisfying shareholders. Let's see how. So let's look at the question. Is it wise? What are the effects? As in every human endeavor, wisdom is very important to navigate successfully in business. It is therefore not out of order to question the phenomenon of making the maximization of shareholder value a priority for management. This will enable us to figure out whether it's still a wise course or not. One thing we learn in management is that the human resources of an organization are the most important resource that an organization has. Is that true? Sure, it is. Does management live that? Or it's simply a rhetoric? I think the latter is true. Even though the facts point to human resources as the most important resource of the company, the reality is that that axiom is hypocritical when the importance of human resources is compared to that of the shareholder. For example, does management report to employees regarding their stewardship? Of course not. While it is true that in certain progressive organizations, management does that, it is not the norm. At least it is not legally binding as it is with the annual general meeting of the organization. In effect, then, the shareholder is perceived to be the most important resource. So, what are the effects of that? The interests of employees are usually relegated to the background, with those of the shareholder at the forefront. This has led to the continuous treatment of employees as mere labor whose sweat is needed as a factor of production to satisfy the capital owner. As a result of this shabby treatment of the employee, industrial peace is often disturbed. And since peace is a necessary prerequisite to development, production is gravely hindered. With employees in a disgruntled mode, they either work perfunctorily or subpar just to get by. Thus, since optimum production is hindered, the shareholder value automatically suffers. And the aggregate effect of this on the economy is horrendous. One of such effects is the problem of unemployment. Since employees do not receive the premium attention that is due them, which in turn affects production negatively, businesses are unable to expand at the rate they should have in order to absorb the growing number of unemployed persons. And this also tells on the socioeconomic well being of a nation as a whole. Also, in the advancement of supposed shareholder value, the interest of the customer is often neglected. Some organizations that withdraw very important support services that they should have been providing for customers just so they can save money. For instance, what would you prefer? Speak to a live person or speak to an AI generated robot? I'm sure you would prefer to speak to a live person like I do when you call your service provider. After all, you pay money. But in order to cut back on costs and improve or maximize the shareholder value, they have decided to either cut down or entirely remove the customer service persons who will provide that human touch when you call. By the way, I am inclined to believe that board members rather enrich themselves even more than the shareholders. Placed in their position as the custodian of the shareholders' interest, their seating allowances, perks, retirement packages, and so on and so forth rather put a strain on the finances of the organization. These are monies that otherwise would have been better invested in customer support, for instance. Next, every organization must be socially responsible. However, this has largely been limited to those responsibilities that would further enhance the so called shareholder value. As a result, some organizations have been involved in subtle forms of deceit and corruption. Certainly, such tendencies do not promote proper societal values, which are at the heart of holding society together, the provider of the very market that these organizations need. So, what happens to their businesses as the values of society continues to be eroded? And what if society finally breaks down? Will these businesses still remain profitable? Will their shareholders continue to enjoy the value on their investments? Finally, of great concern to many responsible and thinking people today is the environmental pollution. Pollution is on the ascendancy, causing climate change and its attendant problems. Yet, since organizations are driven by the concept of shareholder value maximization, many have paid very little or no regard to the effects of their businesses on the environment. Certainly, that does not augur well for the development of human society. In view of the truths that thus far discussed, would you honestly and unreservedly say that the shareholder value maximization motive is wise? Would you? Ladies and gentlemen, let me present to you the value pyramid of management, a better model. In view of the negative effects of the shareholder value model, we should be looking at higher goals for management. In order to achieve that, we first of all need to get our priorities right. Otherwise, business organizations will continue throwing blows in the dark. I hereby propose a pyramid of important components that should give or guide management in its decisions and actions. I call it the value pyramid of management. The most important component is at the apex of the pyramid, while the least important is at the bottom. And these are the six components in the pyramid from the apex or the top to the bottom, the most important to the least important. Number one, nature. Number two, society. Number three, human resources. Number four, the customer. Number five, management. And number six, the shareholder. So in our subsequent videos, we are going to be discussing each one of these components, one after the other. But to begin with, we are going to give a summary of what is to be expected from these six components. So why don't you come back and watch the next video on that summary. Thanks so much for watching. And if you haven't done so yet, please subscribe, like the video, and share. And please continue to seek for and promote excellent management practices in Africa. Thank you.